Okay, everybody, welcome to this. I'm not sure which edition of Crypto Society's Live TA, brought to you by Pepsi Cola. We are going to start by taking a look at the macro view on BTC and what it's been doing. We've done this several times now, so for those that have seen it every single time, bear with us. So we believe that this was a 1, 2, 3, 4, 5, ending at the all-time high, which was about 64,000. We had an ABC correction, and we're in this, what I think is a consolidation zone, accumulation zone. On the big scheme of things, if you look at this big picture from somewhere around here to here, this C wave, this retracement happens to be the 618 retracement from about 10,000 to the 64,000, which is a very nice, solid retracement. So you can obviously draw this many ways, and you can come up with either an exact 618, because you can choose to start it here, you can choose to start it here, you can choose to start it wherever. But I mean, you have to admit that it is within the 618 golden pocket. Wave 4 bounced off of the eventual 618, and now we are in the vicinity of wave 4. It's been tested several times. So I think it's a safe bet to say that we are within the 618 pocket of the retracement from 10K to 64K. I'm just going to move this over so you guys can see the chart a little bit better. Here we go. So that's the macro view. We spoke a few times last time about what happened around here. It's an ending wave diagonal, which is a very bearish sign. Ended up with an ABC. It is a very perfect 1.618 Fibonacci extension from A to B to C. A lot of buy orders were stationed at 30K. We saw a very strong bounce, and then we've been in this accumulation zone. Why I'm calling it an accumulation zone is because if we go to the BTC chart that we have stored as a Wyckoff accumulation scenario, if we go to the Wyckoff accumulation chart itself, which is right here. Do you guys see this? If we would be coming down from here and forming the ABC, and we're trying to see how close we are to this accumulation part of this Wyckoff logic, we see, as we discussed a few times already, but one more time, that it is strikingly similar with this being the spring, this being the test, and we're supposed to, at this point, be coming out and heading out of this accumulation box. So far, it's bearing a very striking resemblance to the Wyckoff accumulation after a dump from the all-time high. Once again, just to remind everybody that the bad news that cascaded into everybody's attention, the Elon tweet saying that Tesla won't be accepting Bitcoin anymore, that Bitcoin is not ecological, that China, I don't want to call it FUD because it's true. FUD is normally just FUD, but the thing with miners having to relocate because China was cracking down on non-ecological mining, because most of the mining that happens in China is powered by coal, coal power, and coal is a very obviously not a clean source of energy. So they were cracking down on those miners, which forced all these miners to start to look elsewhere to mine and to move out and sell their mining equipment. And there was also some news coming out of China that even those that bought and sold Bitcoin, their accounts, their bank accounts were being targeted. Then there was the IRS information that came out also saying that anything above 10K would be looked at by the IRS in the crypto field. So a lot of bad news, a lot of negative news for the crypto space at the time led to this massive retracement, but it's all behind us. It's like it's gone, it's in the past. You can't say, I don't think anybody can say that this negative news that happened now almost a month ago is going to affect the future of crypto, because what's happened has happened, the dump has happened, and now we see ourselves, in my opinion, stabilizing, accumulating in this phase of accumulation, which we just recently showed the chart on the Wyckoff similarities between the Wyckoff logic accumulation and what we're seeing right now. That being said, there are those that still believe there's ways to go down. There are some bears in the market that believe that we will see 20K and some even say 15. It's possible. Of course, it's possible. I mean, no one can say it's not possible. Anything's possible. But I don't see, I fail to see from a TA perspective, aside from this is a leg down and there's a consolidation period, so you can say this is a massive bear flag. TA, and we spoke about this last time, not to take away from TA, but TA can help us to analyze what's going on, why it's happening sometimes, but most of the time, really, it's the fundamentals of the market and what's going on in the market, what's going on in the world that help us to see what's going on. And at least from what I can see, ever since all these negative things occurred over a month ago, and we've had a slew of bad news, things have been looking up. There is more bullishness. You see it on the charts. A lot of people are following this Wyckoff logic pattern. I mean, we're not the only ones that are able to identify this. And therefore, there's a lot of optimism that we're heading in that direction. Just psychologically, if you're following this, you would like to see also some sort of confirmation bias, and you're also going to be possibly looking to invest in that direction. You and another million people. Institutions have not been the reason for the dump. On-chain data shows that it was more private investors, newbies really, that bought high and ended up panicking and selling low, which affected also the price of Bitcoin because it caused a series of cascading stop losses. And you see, some bullishness. For example, from Michael Saylor, who is a leading person in this field, and a lot of people listen to this guy when he speaks, and he is quite bullish. And if you look and listen to a lot of the influencers, I mean, from Chico Crypto to Coin Bureau to BitBoy to whoever, everybody is really quite bullish, and a lot of these guys have access to on-chain data. Something that we are going to be introducing hopefully next week to our live PA calls. On-chain data tells us what's going on behind the scenes, tells us what to look for, because you see what's being accumulated, you see Bitcoin reserves, if they're going up, going down, you see what's happening with the miners. We're at almost a historical all-time low in terms of mining hash rates. What that means is that there's less Bitcoin being produced. There's less miners producing Bitcoin, and we can correlate this directly to the whole situation in China being 68% of the world's mining. All these guys are kind of dispersing right now and setting up shop elsewhere, but it's also opening the doors to newer miners to come in. And it could be you and I. We could be setting up mining equipment in our house, because since the hash rate is so low, and obviously you have to do the math, you have to see where you live, how much you pay for power, what kind of computer you already own. But I was speaking with somebody just on a side note that does this the other day, and he told me with a $10,000 investment, you can buy mining equipment that will pay itself back in 1 year. So I don't know, is that worth it or not? But technically, $10,000 you'll get back $10,000 in 1 year mining Bitcoin. The problem with mining Bitcoin, of course, is that the technology is ever evolving. So you consider yourself, that's great. I'll start, I won't make money the first year. I'll be paying it back, but I'll make money the second year. But of course, the technology improves and it becomes less efficient for you to keep the same footprint. So it's a bit tricky. So then there's mining tools to look at and whatnot. But there will be definitely a surge of new people, new entities, new organizations, new companies going into the mining space, because there is an opportunity since all these Chinese miners are looking to relocate or just sell and just stop what they're doing. So yeah, is it possible for Bitcoin to go down? Yes, of course, it's possible. And if it does go down, then from a TA perspective, we start to try to see, okay, where can it go down to and where are there significant supports? So we're looking at this macro chart, and obviously we did break down below this the other day. We kind of briefly broke down this breakdown, which it's a little hard to see because it's a lot of information on one screen. But this breakdown here, referred to as the spring in the Wyckoff accumulation pattern, this here, right here, it's referred to as the spring, the low volume sales sell-off. If we follow, happened, and then we bounced from there. We did the retest and are continuing up. But if for whatever reason, this is just not true, and it's just, happens to be looking this way, maybe somebody's manipulating it to look this way, to get everybody to go in while they're short. We all know manipulation is rampant in this field. So what happens if we do go down? Where are the supports? So looking at this chart, for sure, we can see, and we'll go into a 4-hour just to see it clearer. For sure, we can see that there are pockets of support, but they're not very strong pockets of support. So definitely there is some support here at 29, which we broke through. There's a little bit of support here, tiny support at 28, which we did not break through last time. And this zone here, I'll just highlight it in a little box. And again, just in case, I'm not saying at all this is going to happen. I'm just saying if we go down, these are areas to look for in terms of support. There's another support in this region here. And then finally, the biggest support is in the 20K region here. So yeah, I suppose if it does happen, these are the areas to look for, and it's just possible from any perspective to see us going back down there. Yes, it is possible. I just personally don't think it's likely. That's just an opinion. So now that we spoke about the bearishness, let's get into some bullishness. Like I said, next week, we're hoping to have Sylvia, one of our esteemed teammates, help us to understand on-chain analysis. On-chain analysis is, like I said, being able to see and analyze and make predictions on what's going to happen in the market based on what we see on chain. So movement of funds, movement of Bitcoins. We kind of are already familiar with this because we get these tweets, all of us, 1,000 Bitcoin transferred from wallet A to wallet B in XRP, or not XRP, excuse me, USDT was transferred. And we all try to make sense of all of this, but this is like the basics, but there is a more in-depth view of this, which costs a lot of money. If you want to have that analysis and data, it costs money, where you can go in and really see wallets accumulating, which wallets are accumulating, and try to tie these wallets to institutions or different people that are, supposed whales, and see what's happening with the miners. Are the miners selling? Are they keeping? So it's a really different and very interesting form of analysis that could supersede TA, FA, and everything else. Or maybe instead of saying supersede, maybe combine with TA, FA to give us a bigger and more accurate picture of what to expect and what to look for. If we go to BTC dominance, and I found this very interesting, I was just playing around with this morning. Looking at the 4-hour chart, I don't really care what happened before. Of course, we all saw BTC dominance drop during this past few months. we saw a drop from 74% all the way down to 39, 40%. And during this time, we also saw our alts. I mean, whatever you threw money at was just kind of going up. So during this period, obviously, Bitcoin was not losing interest. It was not losing interest, right? It was going up during this period. All through this period, this is just going up and up and up.
You know, interest.
No.
So, sorry, whoever's talking, if you don't mind, please mute yourself.
Okay.
No
No co? Nie, no przecież powiedziałem, że nie.
małemu.
Nie zgodzę się tam z tym. Bo już jeżeli jutro pójdziesz, ale nie.
I think you can mute him to the host video.
Yeah, I did. So, so during this period, it's not like we saw Bitcoin prices going down. On the contrary, Bitcoin was going up. But why do we see Bitcoin dominance go down? It's simply because there was more money flowing into alts than there was flowing into Bitcoin. So Bitcoin dominance is a simple formula. It's market cap of Bitcoin divided by the market cap of all cryptocurrencies, right? So if the market cap of all cryptocurrencies is increasing more than the market cap of Bitcoin on a ratio basis, then you see Bitcoin dominance go down, and the opposite for it to go up. So what I wanted to share, what I found interesting, is that over the past few days, and this is from June 27th to 28th, let's say till today, Bitcoin dominance dropped 4%. Okay, it's just a small 4%. Now, if we go to Ethereum dominance, I found this very interesting. Ethereum dominance in the same period rose 15%. I haven't analyzed this further. I haven't tried to make more correlations with it, but I just found it interesting that with Bitcoin dominance dropping only 4%, Ethereum dominance increasing by 15%. I don't know. Is it time for Ethereum to decouple? We do see a lot more institutions talking about Ethereum. Up until recently, we only saw institutions talking about Bitcoin. Well, now we see a lot more institutions and banks, not banks maybe, but investment funds. You hear about Ethereum a lot more. So I don't know if this is the start of something, but I thought it would be interesting, and I'm going to personally follow this just to see, if Bitcoin dominance goes down by a few percent, and I see Ethereum dominance go up by a multiple of that. Well, to me, this could be a sign that there is some decoupling taking place, because Ethereum is grabbing a big portion of why Bitcoin dominance is decreasing. So I found that interesting. I just wanted to share it with you guys. Last week we discussed a channel for Bitcoin. We looked at a channel that was interesting for several reasons. We'll just share it again and talk about it a little more. So it was this channel here. So just to put everything into perspective, all-time high, drop. This is the accumulation phase. So we see this channel. Just going to try to make it clearer. Oops, that's not clear at all. Here it is. So we see this channel. This is the so-called spring, right? And we're in this channel. We hit it here, we hit it here, we hit it here, we hit it here and here. We didn't hit it here, so maybe you say, okay, so it's not so much in a channel anymore, but we do definitely have this here as a top resistance. Now, what's interesting is that this is a 4-hour chart, and this yellow line here is the 200 EMA. And if you recall from last week, and I'm sure everybody knows this, but the next target for Bitcoin to overcome is the 200 EMA in the 4 hours, followed by the 200 EMA on the daily. But the 200 EMA in the 4 hours is going to be important to get over. We tried to get over it here, and we failed. We came back down. Something you look at here, since it didn't hit the bottom, we actually did not hit the bottom of this channel, is what if we should be looking at the following? Instead of a channel, what if it was more of a rising triangle? And I'm just going to change the color so we can just all see it better. put it in yellow. So what if what we really have going on here is more of a rising triangle and not a channel? So we have a hit somewhere here. Okay, we have a hit here, and then we're looking to make another hit here, and maybe break out, possibly break out. What is interesting in all of this is again that if you go from this wave, the top of this wave to the bottom, this horizontal resistance, which is also the top of the rising triangle, is also the 618 retracement level. So there's a lot of confluence that goes on here. And you know, the VPVR stands for visible range. So if I adjust this visible range changes. But as I zoom out, you see that the control point for the VPVR is exactly where 618 is. Meaning that in this visible range, what we visibly have in front of us here, what we see in front of us, the price action that receives the most volume, the price level, excuse me, that receives the most volume happens to be right here, and it happens to be the 618 retracement of this leg down, which is the spring, guys. This is the spring on Wyckoff, and it also happens to be the top of this rising triangle, which we normally break above and out of a rising triangle. So it's interesting. I don't see any bearishness on this. I'm looking at divergences. I think those who know me and what I look for, I always look for divergences to trade. And there are no divergences, which is a good thing. I don't see any bearish divergences here, I should say. I don't see any at all on the 4-hour time frame. Maybe there are some on the lower time frames, and it's normal because nothing goes straight up, and it's those divergences that will explain why we go in 1, 2, 3, 4, 5, right? So we've done this also several times, but I'll just do it one more time just to explain. So we never go straight up. We always do something like this. So why did one retrace? Well, probably because there was a divergence. What is a divergence? A divergence just says that we're going higher in price, but then there's loss in momentum. The buyers are losing momentum. There's less volume. There's many reasons to have a divergence. And divergences aren't only associated with RSI and MFI. You can see them on MACD. You can really see them on any oscillator. I happen to like working with RSI and MFI. But yeah, so things don't go straight up, and just because we see something coming down and there's bearish divergence, we look for them on a smaller time frame just to kind of figure out the waves and figure out where we're going to go down if we're trying to scalp. But in general, if I'm looking at a 4-hour and I don't see divergence, then what I'm saying is that this has more room to go on a larger time frame before it goes back down. That's what I'm looking for on a larger time frame. If I go on a 1-hour time frame, I'm sure that I'll start to maybe notice some divergences, which would be very probable. So on RSI, we don't have any divergences, but we obviously have them on MFI. And the difference, guys, between RSI and MFI is very simple. MFI incorporates volume versus RSI that just incorporates momentum in buying or selling or whatnot. But MFI also incorporates the volume of transactions. So you can also, without looking at RSI or MFI, just look at the volume. Okay. If I'm able to, I'm not sure. But if you just look at the volume bars down here, as you see price going up, you're also noticing that volume is going down. Well, this is a divergence in and of itself. So you'll know that here, you know what, we might have a small correction, which is fine. It's okay. That's what defines the market structure 1, 2, 3, 4, 5. 2 and 4 being corrections, 1, 3, and 5 being impulse up waves, and so on. Something else I found interesting, and I'll just go into the 30-minute here just to kind of illustrate, is I drew this channel a few days ago or yesterday, I can't remember, but I drew this channel here because I noticed this zigzag pattern in here. We broke out of it and retested it and went back up. So very possible we come back to test it again. not necessary, but very possible. It just happens again to you just happen to see also on a smaller time frame where the concentration of the buying and selling happens to be at this point. So this point happens sometime today. So we could come back down and visit 34 before bouncing back up. And this wouldn't be bad. This would actually be bullish because you're retesting a previous 1, 2, 3, 4, 5, and possibly if I extend this down, it has some meaning somewhere else too. So I mean, it doesn't really matter that much, to be honest. But I just found that it's interesting that we retested the top of this tiny channel on such a tiny channel with just it's 2-3 days old. It's not so old, but it means something to enough people that it actually made a difference. So somebody, or a lot of people, were looking at this channel and trading this channel, and this is really this to me encompasses what TA is all about. It's trying to find patterns, trying to find anomalies in the chart, trying to find something where there's reactiveness, whether it's a channel, whether it's a price, whether it's a ascending line, whatever, there's reactiveness. Something is happening, and you keep your eyes on it, and you make your moves based on it. So if you want to play a 15 or a 20 or 25x, we don't recommend you go into these 100x positions because it's pure gambling. But if you wanted to play it and you see this and you see a bounce here, well, it would be very reasonable of you to say, I want to enter a long position if we come back and touch this area again. Because right here, right exactly here, I'll just put a little star on it or something. Right here, exactly here, this would be a good place to do a quick scalp long. Because we would see maybe if it makes it down here, I would go long here. And I just gave you my reasons, and then I would kind of say, okay, so if I want to go long here, what's my plan, right? We always want to have a plan. We never want to just go into something. So I would go long, let's say here, and I'll get to this in a second, but I would put my stop loss right below somewhere here. I put my stop loss right below this line right here, which disappears when I go to, okay, right here. I put my stop loss right below here, and I'll put my take profit here. Why here? Because this is another line that has reactiveness around it. You see we have support. There was some zigzag motion here. We rejected here. We went right through it here. Support. We fell through, tried to make it above, could possibly go back down, try to make it above. Might succeed, might fail, but you agree that this would be a nice target, right? So just completely off topic in terms of the macro view, we're out of the macro view. When you're looking to make a long or a short trade and leverage, this is the kind of thing you want to look for. You're trying to find, where do I get in, where do I get out, why am I getting in here, what's going to change my opinion on if I should get out or adjust my stop loss or just completely cancel the trade. What's going to make me change my mind? In this case, it's a perfect example. If we break below the top of this rising channel, which was significant up until yesterday, we broke above it, we tested it. Well, my idea doesn't make sense anymore. We broke below it, and not just an inch, but like, let's say somewhere halfway through. So my idea is not working anymore. This is no longer support. I'm out. Doesn't mean that it's not going to go back up, but that's the reason why I entered the long. And that's why we're always saying, and it's easier to say and it's hard to do, and I'll talk for myself as well, but always to have a plan on why you entered the trade and why and when you want to get out. We spoke about the rising triangle. This rising triangle is something I personally am going to keep my eyes on. I really find this triangle to be very interesting and could be the catalyst to get us above the 200 EMA on 4-hour, and of course eventually the 200 EMA on the daily, which is what everybody's looking to get over. But it's not over then after that, right? We're not home free. Because, and I'll just put in the 200 EMA on the daily on this chart so we can see it. EMA. I'm just going to put it on this chart. So the 200 EMA on the daily is the 1200 EMA on the 4-hour chart. And it's right here above. So it's currently sitting at 39.8, and it's been going down, right? It's been going, at one point it was at 42. Everybody was saying we have to break 42, we have to break 42. We have to break 42 today for another reason, okay? It's not because of the 200 EMA. The 200 EMA is going to follow the price action. It's currently sitting at 39,844. Last week when we had this call, it was at 40,000. The longer we stay below it, the longer, the lower that target goes. So right now at 39.8. So what are our two targets right now? What are we looking to achieve? We're looking to get above 200 EMA on the 4-hour, which is 36,237 at this moment. And then we're looking to get above the 200 EMA on the daily, which is the 1200 EMA on the 4-hour chart, which is currently sitting at 39,844. But why is 42,000 still important? It is still important, and it has nothing to do with EMA. It's important simply because, and I'm just going to go back to my main chart. It's important simply because it is wave 3. So wave 3, the peak of wave 3 is now obviously a resistance. So this point right here is at 42,000, 41.4, whatever the real number is. Let me just see what it is. It's 41,950. 41,950 is the exact number. Let me just put it up so that it's always the case. Coordinates 41,950. Okay. And I'll change the color just so it's clear. Make it purple, let's say. So this here is going to be the next target. So go back to 4-hour. So first target. I apologize, guys. It's getting a bit messy. So first target, the yellow line, which is the 4-hour at 200 EMA on the 4-hour chart. The next target, there are other targets, but I mean main targets. The next target, the blue line, which is the 200 EMA on the daily or the 1200 EMA on the 4-hour chart, followed by the purple line here, which is the previous wave 3, the top of wave 3. Now, here's also what's interesting, okay, and this is where I was trying to lead all this conversation to. I'm just going to clean up a little bit here, though it's too much information. Just going to take this out, take this out. Yeah, that's good. I'm just going to maximize this. And get rid of everything else. Okay. So here's the other thing that's very interesting. When we did the test, so again, this is the Wyckoff accumulation. This is the spring, the low volume sell-off, the fake out, call it whatever you want. We start to look for waves, right? So if this was the lowest point and we're going up from here, assuming under this scenario that this was the lowest point and we're starting to go up from here, then it would be very reasonable to say this is wave 1, this is wave 2, and now we're making wave 3 somewhere, right? Somewhere is going to be wave 3. In a perfect world, under Elliott wave principles, wave 3, an ideal target for wave 3 is 1.618 extension of wave 012. So if I do, and I'll just remove it so you guys can see it. If I lost all my charting tools. Okay, I'm gonna have to go back out. If I do a Fibonacci extension off of wave 012, so that means that, that means that I'm starting at wave, the bottom of 0. No, that's not what I want. Yeah. I'm starting at the bottom of wave 0. I'm going to the top of wave 1. I'm coming back down to wave 2. Look at where 1.618 is, guys. It is precisely, precisely the top of wave 3. Okay? Like, you can't make this up. It's just, this is what it is. You really cannot make it up. So what does that mean? Why is that so exciting? This is confluence. So this is confluence where there's so much on the chart, and it's all tied together to a point where these numbers line up. When these numbers line up, it says something. It's something to pay attention to. Okay? And what's even more exciting, okay, from a bullish perspective, is if we go back again to the Wyckoff, we said that this was 0, right? This was 0. This is 1. This is, oops, the hell did I just do? Sorry. This is 0. This is 1. Can you guys see the screen? I hope so. This is 0. This is 1. This is 2. And I just said that wave 3 should be somewhere here. That's what I just said. Okay? This here, this line here, is 1.618, right here. 1.618, which is the top of wave 3 exactly. The previous wave 3. We're talking, guys, January 2021. We're not talking something recent. This is 7 months old. Okay? This is the target, the ultimate target. And then now we, at this point, are also getting out of this box of accumulation, where at this point, that's wave 3 from January 2021. This is 1.618 of 0, 1, 2, 3. Top of the channel of accumulation, and here's the bullish portion of this. Look at your VPVR. Look what happens here. There's practically no resistance. If we actually make it above this, the next price action you'll see is going to be somewhere here. Maybe 43. It'll easily make it to 45. Like, I'll say very easily 45, if not 47, 48. You'll just see a huge green candle here. That's what I'm saying. Because there is zero resistance in this area. There isn't any. Relatively speaking, if you make it above this huge band of resistance, think of this as resistance. We were here and we're making it. We came back down. We're making it. We get up to this level. Look at this empty spot. We're just going to see a green candle here. Okay. TA wise, it cannot line up better than this. And you go back to Wyckoff. You go back to Wyckoff. Oh, God. Come on. Here. Go back to Wyckoff. It's basically, we're getting out here, and this is the zone right here, between here and here, where I'm saying there's no resistance. So we get up to where there is resistance, and then we'll have a retrace. So wave 3 would be somewhere here. I would say we would kind of do a retest, maybe once or twice. That would be the end of wave 3, and this would be wave 5, and then we'd have an ABC, and then start a new cycle. This would be a new cycle altogether. So this would be 1, 2, 3, 4, 5, ABC, new cycle. That's how I'm looking at it. That's how we are looking at it. Something else which is also significant that we spoke about last time. This descending line here, I'll try to zoom in a little bit more just to see it better. But this descending line here, look how many tries. This is obviously a very important line, right? Because we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 interactions with this line. And we kind of dipped below it here. We went above it here. We're hovering on this line. We broke above it here, but came back down. I would like us to kind of retest this line. It would be nice. Doesn't have to be, but it would be nice to retest this line and bounce from it, because it'll reaffirm the bullishness of the significance of breaking above this line. And if we do retest this line somewhere around here, we would have made a double bottom. So again, I'm not telling you that Bitcoin is going to go straight up from here. I'm giving you all the possible scenarios, and that even if it does go down a little bit, and it could easily come down to, let's say, 33,000, it's not such a bad thing, because we would just be retesting this line. Keep your eyes on this line as a support. If we break below it, that's a different story. I would like to see it act as a support. Yeah. That's about it. Oh, the last thing, just for fun. Last time I mentioned this, it was just for fun. Don't pay much attention to it. But I was just screwing around with the charts. And the last time, I'll just put it back on. We're on the daily. I'll just put on the 200 EMA on the daily. So the last two times, Bitcoin went below 200 EMA. It spent exactly 52 days under. It was here in around 14th of November, and here in the Bitcoin crash of the COVID March last year. Exactly 52 days. Just for fun, guys, just for fun. This is not a, this is not like a prediction, but just for fun. 52 days, guys, is the 10th of July. I don't know. Just for fun. Just wanted to mention it for fun. Would be really cool if it actually works. Just another example of kind of trying to see and look for similarities and look for things to happen that have happened in the past and maybe repeat themselves. And yeah, just for fun. That's about it for my presentation for today. If you guys have any questions or comments, or you'd like me to look at anything, I'd be happy to do so.
Bilo, it'll be a good one to. We were discussing yesterday about the rounded bottom, and then I said it looked like a cup and handle on BTC.
Yeah, I'll get there. I'm just going to go to a cleaner chart though. You know what? I'll just make a brand new chart.
And then just as you show it, as you're building it, just to say what significance of a rounded bottom and a cup and handle is.
Sure. So what chart is this? Oh, took me back to this. How do I start a clean chart?
We currently don't have a pump on either. I don't know if you got the message that you had to leave earlier about 4 o'clock.
Okay. It's okay. I just need to start a clean chart. Okay, I'll just go BTC. I'll just go take up another exchange. USD. Bittrex. Let's take Bittrex. Here we go. All right. So we were chatting with this. So I think it was here, right? DJ around here. Yeah. DJ.
Yeah, that's right.
I think it was around here, right? So sometimes we'll see price action actually travel not in a straight line, not in a channel, but in a curve. And it's usually very, very bullish when we see this. And let me just try to. Yeah. Sometimes it's just a bit difficult to draw.
Yeah, unless I'm looking weird, it doesn't look like a chart, is it? Because we're currently at 35,000.
You're right. What is this? What am I looking at? Okay, let me. This is Wanda. Okay, I don't know what that is. I'll take another one. BTC, USDT. Okay, that's better.
Great, yeah.
Hallo.
سامر خالد حسام هشام wer war noch da? Khalid von Zahra der Mann.
All right. So, is this what you wanted to see?
Yeah.
DJ? Okay. So we see this kind of like a rounded bottom here, and it could technically end anywhere. But what DJ is referring to, I'll just try to draw it out, is something that resembles a cup and a handle, and that's what it basically would look like. Just basically, okay, guys? So a cup and handle pattern is where you have a significant dip with not just the dip, but like it actually that you can connect enough dots that you can make a curved line. It shouldn't look something like, for example, just to explain, it should not look something like this. It should not look something like, for example, this. Okay, this would not qualify as a cup and handle, okay? Because you're like stretching it. But here we have enough contact with this curve that it does look like a rounded bottom, no pun intended. And what we look for at any stage, it could be here, it could be anywhere, but what we look for is at a neckline, at a determined neckline, to be determined by TA, by chance, whatever, we look for it to dip again, come back down a little bit, and then go back up. And once that happens, is when we see a breakout. And the breakout is measured, the technical target of the breakout is exactly the depth of the cup. So this would be the target. Okay? That's the theory behind the cup and handle. So what are we looking at here? We're looking at a cup, still in formation. We could technically have said, well, this here was a cup also. I'm really bad with drawing. Bear with me, guys. Here. We could have said, well, why was it? Well, this could have been a cup and handle then, right here. And there's no argument against that. This could have been a cup and handle. This is the cup. This is the handle. And we're currently breaking out. In which case, the target of this cup and handle is 36,400, which makes a lot of sense really, because it's this resistance right here. Makes a lot of sense. Makes a lot of sense. But why stop there? Because theoretically, this could also now dip and also be a cup and handle. So we're looking at all these options. So we can say, well, here's our cup and handle that we want to look for. Oops, sorry. Let me just take it back and bring this down. So we're saying here's our cup and handle that we're looking at currently. And we could dip. We can dip down somewhere to here. And now the target of this cup and handle is 38,500. Okay. Or this is obviously a third option. And the third option is we might see Bitcoin continue on its path up to do something like this, let's say up to here. And if it does that, then this is our nicest possible cup and handle. And I'm not drawing this right, guys, but you get the idea. And then we dip. however we dip, we could dip, all the way down to here. It just doesn't have to be like a tiny little, it could be this. And at that point, the technical target is, let's see, 40,000, which, to be honest, is what I would love to see more than anything, because this is also, we're going above, obviously we're getting above the 200 EMA on 4 hours, as well as the 200 EMA on the daily, and then we would go on to test that 41,950 or $42,000 $42,000 resistance, which is the top of wave 3 from January 2021. So not only, guys, when you're looking at a chart, don't always only look at straight lines and channels and arrows and triangles, but there's also these rounded bottoms that you always should be on the lookout for, because they could represent the cup and handle. Now, since we spoke about a cup and handle, I'd also like to bring to your attention that there's something called an inverse cup and handle. And the inverse cup and handle is the exact opposite of a cup and handle. So if you see this pattern, this is a potential inverse cup and handle, and its target is exactly this. So that's that on cups and handles.
Yeah, just because, you what was good was you were showing cup and handles inside cup and handles, so you could take it from time frame. Sorry, that's my dog's
that's right.
Toy. But if you actually, I think I just need you to confirm this.
Yeah,
If you take the start of the cup from about the 18th, 19th of June, and then take the end of the cup to now, I think I've just seen a figure.
Let me just get to the 18th, 19th of June. Sorry, 1 second. Here?
Yeah.
Okay.
And then have a look at those touch points there.
So this is what I was kind of saying before about not forcing a cup and handle, because with a cup and handle, at least you want to see, like here, a lot of contact with your curve, and the curve should really be clean. Okay. If you go to this one here, 18th, 19th of June, it's kind of hard to draw a curve on it unless you discount this here. If you discount this, then I suppose it's very, very feasible. Let's do it.
Yeah, I hardly ever use, for me, I hardly look at wicks, because they can just bounce straight back up or straight down.
Yeah. So from this perspective, and it's hard to make it fit, but you guys can see. You know what? I'll just do it manually. I'll just try to draw what DJ is referring to, because I see it. Maybe it's this or this. Maybe this. So it's kind of like this, right? Something like that.
Yeah, it doesn't necessarily have to be that time range. It was just as you're showing, that looks a bit like a cup.
Of course, it can definitely qualify as a cup if you discount this wick here. So you have multiple contact. I would have liked to see more close contact with it, more close contact. But the good news is, whether it is a cup and handle or not, it definitely qualifies for a what I was mentioning earlier. It qualifies for an ascending triangle. So here's the ascending triangle right here. And if you recall, guys, the top here, that's 618. Here. This is 618 that we were talking about earlier. Let me just take you back just to refresh your memory. I'll take this out. This, remember 618 right here? This is the same 618. What happened to my triangle? It's gone. I'll do it again. So whether it's a rounded bottom, excuse me, not a rounded bottom, whether it's a cup and handle or not, it's the same exact target, because it's actually better, because we are grabbing the wick to make part of the target. DJ. So we have a very clear ascending triangle here. So whether it's a rounded cup and handle or not, it's the same target. Because now the target of this, we showed this earlier. This is the target. If we do break out of this 618, and this is exactly 618. The target is 43.
I'd like to see it retest, not for anything else, because I want more sats at a cheaper price.
Absolutely. But I don't know if people will be happy with you.
Sometimes you just got to be a bit selfish.
So yeah, that's there's a lot of confluence on this chart, guys. And we talk a lot about confluence. So just again, it's a fancy word. Just means that there's enough price action patterns, indicators, whatever, to support a particular idea or to support a particular price point that is reactive. That's all it means. Just enough things to point you in one direction. It's just confluence. So we have a lot of confluence on this chart, and it's bullish confluence at the time. For the time being, it's bullish confluence. Anybody else?
Who's drawn the actual double bottom with the left cheek bigger than the right?
Yeah.
That wasn't me. I'm not walking the dog.
That's okay. Anybody else, guys, before we wrap this up?
The only one that, for me, well, you know, I'm always going to say two.
ETH. Let's go to
Sol.
Let's go to ETH.
ETH has got some big plays in it.
Well, like I said, ETH is, I don't know who drew this, but if you don't mind maybe erasing it, I don't know if I can, just so I could, I can see if I can erase it. Can I do it? Yes, I can. Check it out. Okay. ETH has been performing better than Bitcoin. Okay, I mean, you see it in the price action. It's definitely been performing better. Last week, so we did this chart last week, I think, during the call, and we identified again, same thing, ABC, accumulation, identified that we have a triple bottom, 1, 2, 3, and we said that the next target was the 200 EMA on the 4-hour, and we actually made it above the 200 EMA on the 4-hour. Now, we've made it above here and here, and we came back down. So it's too early to celebrate, but this was the next target, which we have achieved. This was from last week's TA call. Where is the 1200 or the 200 on the daily? It's actually below. Sorry. So the 200 EMA on the daily is actually below us. So ETH really has outperformed Bitcoin, guys. We are below the 200 EMA on the daily on Bitcoin, but are above it and have been above it throughout this dump, except for this period here. Where ETH is doing better than Bitcoin. There's nothing more to say. ETH is performing better than Bitcoin. So we're looking at this channel, and I think I recall distinctly saying last week that if you see this channel, this accumulation channel, and this would be a good place to buy, and potentially this would be a good place to sell. And you just play this channel. But if we're right about Bitcoin getting out somewhere around here, and we're in wave 3 heading to that 1.618, well then, if you sell, it would just be because you want to be safe and see what happens before you enter back in. But this would be a very reasonable place to sell. If you just want to play the channel and you're thinking maybe we're going to be in consolidation for a longer period of time, and that's purely from an FA perspective, because from a TA perspective, there is no reason to believe that once we get here, we're not going to continue up, because there again, very little resistance. I hope that helps, DJ.
It does. I just actually put into the chat on this that I actually see a dog pattern That looks like a
Oh,
Westie from the
yeah.
left, being the head all the way through.
Was it a? I think it's a golden retriever dog pattern this time, though, right?
It better be golden. I need that.
Yeah.
And then, no, that's bang on. And the other one that we were looking at last week was Soul.
Soul. Yeah, let's go back to Soul. Where is it? Here it is. Okay. So last week we said that we were looking at an A, B, C, D, E, and then we should break out. Okay, so we kind of broke out, but we're consolidating. So it's not a real breakout, because a real breakout, the target of such a breakout would have been here. I mean, we're not there yet, and doesn't mean we won't make it, but we are out, and we're now just in this consolidation phase. Why is it consolidating? I don't know. Let me just see if there's any TA that points to anything.
But it had a good run up as well, didn't it? And it's above the 200.
Yeah, absolutely. But then again, it hasn't been listed that long in finance for it to be. You see where the 200 started? It started here, this year. So it's not very reliable. In this case, EMAs are not, when it's a new listing, they're not the most reliable to look at the long-term EMAs. You start looking more at the short-term EMAs. But what is this? This is the 200 EMA on the daily, so we're flirting with on the 4 hour, excuse me. We're flirting with the 200 EMA on the 4 hour. So it would be nice to kind of test this a few times, which is what it looks like it's doing right now. And that might explain why we haven't made a move back, continuing the move back up, because we do have all this resistance to get over. Let me just zoom out a bit. We do have this zone of resistance to get over, and then it becomes like, whoop. We go back and test all-time highs again, but there is significant resistance here. You see all this zigzagging, there's a lot of price, a lot of concentrated pricing, buy and sell in these zones. And right now, probably the bullish scenario for Solana would be to retest this 4 hour EMA several more times before we continue up. The bearish scenario would be we fail to keep it as support and we break back down. That would be the bearish scenario. And by the way, both up and down from where we are right now have a strong support if you're coming down and resistance if you're going up. So we're in a zone that it also kind of explains why we're in this like consolidated zone, is because there's a lot of support below and a lot of resistance above. And that could also explain why we're going sideways for now. It would probably take some strong impulsive Bitcoin moves to propel the market back up again. Until then, I'm happy that we're at least consolidating and not dumping.
Have we looked at for a little while the market cipher to see any blood diamonds?
I haven't. Let me take a
false
look.
buys?
Yeah. Let me take a look. I'll go to the clean chart of Bitcoin. And I will add market cipher. Here we go. Start with the daily. And I just gotta go get my manual for what it all means, because I don't really use market cipher that much. So there's a blood diamond here, but as you see, this was on the 1st of July. So we came down from 37,000 to 32,000, which is pretty good. There's nothing on the chart right now. Actually, let me put in market cipher B as well. Sorry, one sec. I will do that. Market cipher. Invite only B. Okay. Here's market cipher B. So we do see this green dot here indicating a buy signal on market cipher B. I'll make market cipher bigger, just so we can see it better. Okay, we see a buy signal right now as we speak. We see a buy signal on Bitcoin on market cipher B on the daily. If I go to the 4-hour chart, this
It's not formed.
no, it hasn't formed here, but this golden triangle from memory, I believe, is a continuation. Let me just check. I'm just gonna check here. Market cipher symbols.
Literally, just as you're saying that, he's starting to pump.
Where are the symbols? Market cipher A. Yeah, here we go. So, here. It was a golden diamond, right?
Yeah, there's a diamond there.
It's a bullish continuation. So, going back to the chart. So these diamonds, these golden diamonds here, refer to a bullish continuation. So according to market cipher, we see a buy signal on the daily, and if we go to the 4-hour chart, we see bullish continuation, meaning that we're going to continue back up here. Okay. If we go into lower time frames, we see again that we have a bullish continuation and we have a buy signal. So it's interesting. I haven't really learned how to use market cipher yet, but this is the basics.
If you can, because it's looking a little more bullish on the ETH chart.
Sure, a little ETH. Okay. So we'll go back to the daily. And we have not one, but two green circles on the daily. And ETH is pumping, as you said. If we go to the 4-hour, again, we see bullish continuation on the 4-hour. And if we go to the 1-hour, more bullish continuation and a buy signal, similar to that we saw on Bitcoin. So really, the market is looking quite nice, guys. There's enough TA from a TA perspective. There's definitely enough TA to give us hope that we should be moving up. Now, one tweet away, things can change. Some news can come out. Some institutions can decide to manipulate. Barring this, the TA looks quite nice right now.
Excellent. Thank you.
My pleasure. Any other questions? Anybody? All right, guys. So just as a reminder, we are going to be doing these regularly every Sunday at 4 p.m. CET. It just happens to be the time that most of us on the TA team can be there together. It just happens today that others weren't able to make it. But try to put it in your calendars. We have fun doing these. It's informative, and your input helps us as well. You can sometimes give us a perspective that we haven't looked at, so you can actually help us to look at the scenarios that we haven't seen before or haven't contemplated. So that helps us as well. Please do follow us on Twitter, on YouTube. We are really trying to grow the following on YouTube because we want to help with the educational content. There's already a lot of educational videos on YouTube. Aside from the live TA that we post, Borg, one of our teammates, spent a lot of time and put up some very, very educational videos from staking to opening up different wallets to bridging to parachain auctions. So many things on there, guys. It's really a wealth of information, and Borg goes in deep. He's the kind of guy that goes in very deep and a lot deeper than any videos that I've seen in trying to explain how to do things. So try to take some time and look at those videos, and we would appreciate you sharing our YouTube channel with your friends. and referring us to your friends, have them come into Crypto Society if you enjoy the space and you like hanging out there and communicating and learning and providing and educating yourselves. This is what we aim for, and this is what we're trying to build. Thanks again for being here today, and we'll see you all next week.